Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks. His website is rickackerman.com. Rick, the markets over this summer, kind of confusing. On the same day, we see the price of gold go up along with the equity markets. And then, on the other hand, they go down at the same time. And I thought that kind of breaks a general rule. Gold does well when the markets are going down and vice versa.
Well, I think we're seeing a lot of slippage here relative to the rules, simply because the market is so indecisive, so trendless. If you want to quantify the dull days of summer this year, I read somewhere where the volatility is the lowest it's been in 20 summers. So this is really the doggiest of doggy summers.
Also, the U.S. Fed is sending the most confusing messages. Janet Yellen, the boss apparently, will tell us, well, I still am looking at rate hikes this year. And then the vice president of the Fed comes on a couple of hours later and says, hold on a second, maybe not.
Yeah, and I try to be respectful, but it's hard to hold back. She's an imbecile, and she's not only an imbecile in the economic sense that the policies that she's practicing are just kind of make it up as you go along, and they're kind of nutty when you look at them in a rigorous, economically scientific way. But the vacillating is not even accomplishing the Fed's old goal, which is simply to manage expectations. She's got expectations so poorly managed at this point that no one knows what to expect.
Is that harmful to the markets, or can they survive this kind of indecision?
Well, with these very doggy days of summer, they could survive, unfortunately, indefinitely. It's boring us traders to death, and we'd like to see things take meaningful trends. Looking at gold, though, I'm tempted to say that the drift is really opposite the strong trend. Without any strength pushing gold the way it should go, we're getting more of a correction than I might have expected.
How long will this correction last?
Well, if you kind of read the news and do your homework, you'd think that the whole world could fall apart sometime by the end of this week. But, of course, things never happen in the markets according to our expectations. Labor Day, though, which is coming up Monday, has a way of bringing people to their trading desks with a new attitude on Tuesday. So we'll have to wait and see. But I think we're going to be stuck in doldrums till at least then.
Did the robot traders throw anybody off?
No, I think that the algorithms are kind of they're driving themselves nuts right now, because the trends are not meaningful, and of course you're focused on shorter and shorter trends just to capture tradable moves. So I think the algos are just as bollocksed up as the rest of us.
Has it been risky or crazy for pension funds to start to use equity markets as a way to raise pension income?
There's some things we need so desperately that they absolutely can't happen. And of course, the market's not going to give us the kind of returns that these pension funds that have been banking on 6, 7, 8%. It's not that they need them; they're desperate to have them. But these days, you can't get that sort of yield unless you're heavily invested in Bolivian reverse floaters.
Negative interest rates in Europe and Japan, have they helped?
Yeah, they've helped to sort of bring about to make the crashing end of it all more inevitable. If you can find any positive results from negative interest rates, you're welcome to try. In the first place, you see that a lot of the money machines, particularly the big multinational banks, are strapped to find yields, or the pension funds can't find yield. Nobody can find yield. Nobody can find alpha, and or even much beta for that matter. And or I'm sorry, nobody can find beta, and these days not even much alpha. So negative interest rates are really just burying savers as well, and you'll see the deflationary end game of that because not only are the lower rates not encouraging people to take money out of savings and spend them like crazy, but they're actually saving even more because at this point they're kind of thinking, well, if I'm retiring in 5 or 10 years and the yields are going to continue at 2% or less, then I'll need a bigger nest egg. So the loosening, at least as far as individuals are concerned and private savings, is having the reverse effect from what was intended.
In Japan, they have a term called closet money, where you take your money out of the bank that you don't trust and you go and hide it in your house. Are more people going to start doing that?
Well, I think I guess it's pointless to put it in some bank account that's yielding. Whenever I go to Wells Fargo, the teller says, hey, do you know we have some accounts where you could keep this money where it would be gathering interest? And I can't stop myself from giving them the lecture about I don't need your 0.6% yields or whatever you're trying to encourage me to find. So at this point, there really isn't a significant difference between putting the money in your mattress and putting it in some bank account.
Banks, of course, are charging higher and higher fees for your accounts. Is that how they're trying to make up for low interest rates?
Yeah, and it's kind of a chintzy nickel and dime way to get back to profitability. You know, they've been sort of playing in the big leagues with all the funny money in the trillions or certainly hundreds of billions, and now all of a sudden they've got to nickel and dime their customers to try to make the banks profitable. You know, you put your trading desk on furlough, and you just hope that normal banking services somehow make money. And you also see a lot of the the specialists, UBS and Goldman, some of the companies that do business, the banks that do business with a lot of high net worth individuals, they're trying to figure out a way to make money doing business with your average Joe. So I wish them good luck on that.
Well, some banks feel it's their right to collect 2% of your income no matter what. Is that part of this whole plan?
Yeah, it's like I said, you got to wish them good luck. But if they stumble and fall, on the other hand, it couldn't happen to a nicer bunch of guys.
We'll have more with Rick Ackerman right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Rick Ackerman. Rick, what's going to happen with crude oil from now until the end of the year?
Well, I've been, since the top in June, just a little bit above 50, I've been saying that anybody who talks about $60 or higher oil should have their head examined. You know, oil is really it's caught in a deflationary vortex. And we saw for a while, this is something you and I talked about, that the powers that be were trying to drive a supply side story, and it was based on the prospect of Venezuela curtailing supplies in a very crucial way, or Nigeria throttling supply. And this was always something that was just around the bend, but in the end we simply saw producers who were desperately strapped for cash to continue pumping, and of course Saudi Arabia leads the way there. So as long as the Saudis need the money, you certainly aren't going to see constraints on supply that somehow push prices up, oblivious to actual decreasing demand, mainly coming from China's slip into recession.
Have we seen the last of international cartels that can control the price of oil?
I'm not going to say they'll never get another chance, and if certainly one jihadi with the Stinger missile could control the price of oil. You know, you take out a tanker in the Strait of Hormuz, and all of a sudden oil is trading $15 to $20 higher. But let's just say that the cartel doesn't have quite the sway that it used to.
Is there any truth to the rumors that there are massive super tankers sloshing around with gasoline made in China looking for customers right now?
Well, worse than that, they're sloshing around with water in their holds. And of course, even to some trained observers, you can't tell whether a tanker that's sitting kind of low in the water is filled with oil or filled with seawater. And the problem there is that so many countries that export oil don't feel bound in any way to reporting inventory figures that are accurate, that traders could rely on. So with the size of these tankers, if you can't get an accurate fix, if there are just 3 or 4 of them and you can't figure out what's in the hull, that is at the margin, enough to swing crude one way or the other. So it's pointless to focus on some of these oil inventory numbers, because the people who would use those numbers, mainly traders and some of the bigger investment houses, they're clueless as to what's actually out there.
And of course, we're coming to the end of the annual driving season. How much of an impact is that going to have on crude inventories?
Well, you saw a little blip. You know, I saw pump prices for regular fuel at Costco just under $2 for a little while, and somehow they've gotten a little boost, I guess, from the tail end of the quote-unquote driving season. But I don't know. I've rented a Nissan Altima for a trip back to the Jersey Shore, and it's certainly not burning enough fuel to make a difference. I'm not seeing the roads jammed with traffic. So, you know, that at the margin, that's only a very small thing for keeping crude prices or pump prices marginally buoyant.
Do you see gold and silver prices taking a bit of a break now?
Yeah, in fact, I'm just putting out a couple of forecasts in my own newsletter, rickackerman.com, and oil, or the December gold contract, the COMEX contract, looks like it's going to come down to at least 1302, and currently trading 1314. Off a low, I think it was around 1312 today. So I think we've got another $12 to fall, and I'll just have to wait and see how that, I call it a hidden pivot support, handles the slippage in gold. But if it goes any lower, I think we could come all the way down to the post-Brexit, or it was actually a price that I would call the launching pad for the Brexit rally in gold, and it's at around $12.19. So you can see gold come down $80 or $90 here if it doesn't hold above 1,300.
Rick, thank you so much for chatting with us.
Well, always a pleasure, Jim.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks. His website is rickackerman.com. You're listening to HowStreet.com radio. You can find us on Twitter at TalkDigitalNet. Our popular YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.